Welcome to the Digital Wallet Configurations module in BankBuddy. This section lays the foundation for how wallet operations are structured and governed. It provides a centralized interface to configure key financial and operational components such as general ledger codes, transaction and holding limits, charge rules, and transaction templates. These configurations ensure that the wallet functions within regulatory boundaries while allowing the bank to offer personalized, scalable, and financially secure services to its users. Let's take a look at General Ledger. The General Ledger is essentially the financial backbone of the digital wallet. It maintains a complete and real-time record of every transaction, that is, every amount debited or credited, clearly showing from which account the amount is debited and to which account it is credited. This ledger enables traceability and financial accountability for every single wallet transaction. Now, to provide clarity and structure, the General Ledger is categorized into 4 standard groups, known as ALIE, where is A for assets, L for liabilities, I for income, E for expenses. Let's understand these with a simple banking example. Suppose a customer takes a loan from the bank. The principal amount given out by the bank is recorded as an asset. The interest charged on that loan becomes a liability. The fees incurred for processing that loan fall under expenses. And finally, the interest payments and service charges received by the bank are treated as income. This categorization helps ensure that every financial movement through the wallet is accurately classified, tracked, and reported. The GL Summary dashboard offers a consolidated view of all general ledger codes configured within the wallet system. Each GL code is associated with a specific category such as asset, liability, income, or expense, and is further classified by its type, whether internal or customer. You can see key attributes displayed here, such as GL code, the unique identifier of the ledger, category indicating if it's an asset, liability, income, or expense, type whether it belongs to internal operations or customer accounts, leaf or node indicating if it's a final ledger or a parent ledger. Parent GL shows the hierarchical relationship. Manual posting highlights whether entries can be manually posted into this GL. Blocked or active status indicators for each code. Action allows users to take relevant actions like edit, deactivate, or view history. This dashboard is designed for real-time visibility and management of ledger structures. It enables the finance or operations team to maintain a clean, audit-friendly ledger setup. This screen allows authorized users to create or modify general ledger codes directly within the system. Let's walk through the key fields available in the Edit GL interface. GL code, a unique identifier assigned to this ledger entry. It must follow the organization's coding structure. Leaf or node indicates whether this GL is a leaf endpoint ledger where transactions are posted, or a node parent ledger that groups multiple subledgers. Parent GL defines the hierarchy by linking this GL to its parent ledger, if applicable. Manual posting, a checkbox to enable or disable manual entries into this ledger. Typically used for internal adjustments or exceptional cases. GL description, a brief label like cash that defines the purpose of the ledger. Category, defines the financial classification asset, liability, income, or expense. Type, specifies whether it's an internal GL used for system operations or a customer-related GL. Allowed currencies, enables multi-currency compatibility by selecting which currencies this GL supports. As shown here, the platform supports a wide range of currencies like USD, Euro, INR, GBP, and more. Blocked or unblocked indicates whether this GL is currently blocked from usage. In this section, we'll explore how general ledger data is managed and accessed via CSV files. Admins can import general ledger data directly by uploading CSV files through the system. Once uploaded, all GL logs appear in the dashboard, giving you full visibility into every entry. As you can see, each row in the table corresponds to a specific ledger item, showing details like GL code, description, type, category, currency restrictions, and more. The system also supports manual postings, allows parent-child code mapping, and distinguishes between internal and external sources, making reconciliation and auditing seamless. If you want to review any specific entry, just click on the Action button against the respective line item to view full GL details. And if needed, the entire dataset can be exported as a CSV file for offline analysis or reporting. Let's now move on to limits. The Limits feature in BankBuddy's digital wallet allows the bank to define rules and thresholds for wallet usage, ensuring both regulatory compliance and operational control. Banks can configure two main types of limits for specific accounts or users. Transaction limit. This controls the maximum amount that a user can transact in a single operation or over a defined time period, such as daily or monthly. Holding limit. This defines the maximum wallet balance a user is allowed to hold at any given point in time. These limits are especially useful for managing different user tiers, regulatory requirements, or promotional use cases. Limits can be dynamically assigned using several configurable parameters, including user type, whether the user is an individual, merchant, corporate, or agent, user category, based on customer segmentation like salaried, student, premium, etc., KYC level, based on whether the user has full, partial, or no KYC completed. This flexible configuration ensures that every wallet user operates within controlled boundaries, while still offering personalized features based on their profile. Let's now take a closer look at limit parameters. In BankBuddy's digital wallet platform, limits are not just based on user types but can also be finely controlled using specific transactional parameters. Here are the key parameters you can configure. Transaction volume places a limit on the number of transactions a user can perform in a defined time frame, such as per day, per week, or per month. For example, you could restrict a user to a maximum of 10 transactions per day to prevent misuse or bot-like activity. Transaction amount refers to a limit on the total monetary value transacted within a given time window. Per transaction value defines the maximum allowed value for any single transaction. Let's now look at transaction limits. This screen displays a consolidated dashboard of all transaction limits configured in the system, tailored to different user profiles and KYC levels. These limits define how much and how often a user can transact, ensuring compliance with regulatory guidelines, especially those related to KYC norms. Let's break down the key columns you see here. Transaction code. This specifies the type of transaction, such as QR payment or bill payment. User type indicates whether the transaction is being performed by a customer or merchant. User KYC level. This reflects the level of verification completed, ranging from no KYC to full KYC. User category helps segment customers further, such as gold customer, student, or aggregator. Currency code defines the currency in which the limit is applicable. Account type, typically mapped to a cash account, where the wallet balance resides. Action provides options to view, edit, or delete the limit using the action dropdown. This granular setup ensures that each transaction type is governed by precise limits, defined as per user risk profile, regulatory status, and business logic. Let's now take a look at how transaction limits are actually configured in the platform. We're currently on the transaction limits creation screen, where the admin can define limits based on a combination of transaction type, user type, KYC level, and account settings. At the very top, we begin by selecting the transaction code, for example, QR payment, along with a transaction template, if you'd like to reuse an existing configuration format. Now, under the Add Limit section, we define one or more rules that control how much and how often a specific user type can transact. Let's walk through the example shown here. We're setting up Limit 1 for a customer. The KYC level is level 0, which typically means a user has minimal or no KYC completed. The user category is Silver, and the currency is INR. Account type selected is Cash Account, which is the primary wallet balance ledger. Now we define two key criteria. First, we set a maximum number of transactions. Here, the rule limits the user to 20 transactions per day, helping reduce overuse or fraud risk. Then, we add a maximum transaction amount. meaning no single QR payment can exceed that value. This way, even if the volume is controlled, high-value risk is also mitigated. Below that, we have Limit 2, where similar controls are applied to a merchant user. This illustrates how we can tailor limits differently for customers, merchants, students, or premium users all in one place. Let's now move on to holding limits. While transaction limits control how much you can move, holding limits define how much balance a user is allowed to maintain in their wallet or cash account at any given time. This is especially important for regulatory compliance, particularly in jurisdictions where wallet balances are capped based on KYC levels or account types. On this dashboard, you'll see a list of all existing holding limits configured for different user segments. Let's quickly go through the fields. User type, this could be a customer, merchant, or agent. User KYC level defines how much verification the user has completed, for example, Level 1 for partial KYC or Level 2 for full KYC. User category helps further segment users, like students, aggregators, etc. Account type, this could be either a wallet or a cash account, depending on where the balance is held. Holding limit, the maximum wallet balance the user is allowed to maintain. And finally, the action drop-down allows you to edit or manage each configuration. This setup helps institutions enforce financial safety, reduce risk exposure, and also comply with wallet regulations that may vary by user type or KYC status. Now that we've seen how holding limits are used, let's take a closer look at how they're created. This is the holding limits creation screen, where an admin can define how much balance a user is allowed to hold in their wallet, based on various conditions. We set the maximum wallet limit, which defines the upper cap on the wallet balance that this type of user is allowed to maintain. In this example, we're configuring a Level 0 KYC Silver customer, with a holding limit defined in INR. Once all values are filled in, clicking Save ensures this configuration is applied across the platform, meaning the system will automatically block any incoming credit that would cause a user's balance to exceed this limit. This not only helps maintain regulatory compliance, but also adds a layer of financial control and safety for both users and the bank. In this video, you'll see how users can define transaction limits by selecting a transaction code and applying a template. They can configure key fields like user type, currency, account type, and set criteria such as maximum transaction amount or number of transactions per period. Next is holding limits, where admins can define how much balance a user can hold based on user type, KYC level, currency, and account type. Lastly, under screen configuration, each transaction is linked to a transaction name, type, and screen ID, with the option to upload a representative image. Schemes are used to define which specific charges should be associated with which transactions, allowing for flexible and rule-based charge application. This screen allows you to configure a new scheme by setting key parameters. In the default scheme, a fallback charge is applied in case no custom schemes match the transaction. Under Scheme 1, you can see how a scheme is defined. Each scheme has a unique code in this example. You can also set a minimum charge value, here it is 120, and a maximum cap, which is 2,000. These values ensure charges stay within predefined boundaries. Additionally, the scheme is active only between the selected start date and end date. Further conditions and detailed charge rules can be configured under Scheme Condition and Scheme Details sections. By using schemes, you can ensure accurate, dynamic, and transaction-specific charges, improving both compliance and customer experience. Let's take a closer look at how a scheme is defined. A scheme allows charges to be configured based on specific conditions such as the customer category, currency code, or a post-match flag. In this example, we define a new scheme with the code, set a start and end date, and establish minimum and maximum charge limits. Next, we set the conditions under which this scheme will apply. For instance, this scheme targets customers from any category, using the USD currency, and requires a post-match condition to be applied. Finally, in the Details section, We define the charge range and its value here. A 3% fee is applied within the specified amount range. Let's now move on to understanding transaction codes and templates. This feature allows wallet administrators to define new transaction types by assigning them a unique transaction code, selecting a category, and adding a description. Once defined, these codes act as identifiers for that specific transaction behavior and can be deactivated at any time if the transaction is no longer required or needs to be paused for compliance reasons. Every transaction also follows a predefined template. These templates are critical. They not only define how the transaction is structured but also serve as a blueprint for generating automated accounting entries. So, for every wallet transaction, be it a payment, top-up, refund, or charge, there's a corresponding template behind the scenes that ensures the correct GL entries are made in real time. Let's now take a quick look at the transaction code dashboard. This screen provides an overview of all charges defined by the user for different transaction types. Each row in this table represents a unique transaction code along with a description, its current status, the type of charge applied, and the calculation method or scheme type, whether it's a flat fee, a tiered slab, or a rate-based value. You'll also notice the value type column. This determines whether the charge is applied as a fixed amount or a percentage rate. From this interface, you can easily view, edit, or deactivate transaction codes using the Action button on the right. Let's explore the transaction code creation screen. This feature enables users to define new transaction codes that can be used across various processes with detailed tracking options. To begin, enter a transaction code and a description that clearly defines its purpose. Next, assign the appropriate category to classify the transaction. You also have the option to enable OD tracking, which helps monitor overdraft-related activities, and credit tracking, to manage and record credit-related transactions. Lastly, the Consider for Activity checkbox allows you to flag the transaction code for specific system-wide activity tracking. Once configured, the transaction code becomes available for use in workflows, charge assignments, reporting, and compliance monitoring, ensuring every transaction is traceable and categorized accurately. Now let's look at how to edit an existing transaction code. The interface allows users to make updates to all key fields, including the transaction code, category, description, and tracking preferences for both OD and credit. You can also decide whether the transaction code should be considered for activity tracking by enabling the checkbox. Below, the transaction template section displays all linked templates, showing important details like template code, source and destination accounts, beneficiary name and status, whether the template is active or inactive. Each row offers an action menu, enabling you to manage templates directly. Let's now understand how to create a transaction template. Templates are reusable definitions that simplify and standardize various types of transactions. To begin, enter a unique template code, specify the from account and to account, and assign a beneficiary. You may also add a description to provide context or usage notes for the template. Next, we define the accounting entry, which allows you to configure how the transaction will be recorded. Here, you can select parameters such as the event, amount type, index, account, and location. You also have the option to enable netting, which offsets receivables and payables, and activate customer alerts for real-time notifications. If needed, multiple accounting entries can be added using the Add Entry button, allowing for more complex templates involving several financial actions. Once saved, this template can be linked to transaction codes and reused across workflows, ensuring accuracy and speed in transaction processing. Let's now talk about charges, a critical component of any digital wallet ecosystem, both from a revenue and policy enforcement standpoint. The BankBuddy platform supports real-time charge calculation, ensuring that fees are applied accurately during transactions, without delay. There are two main types of charges: transaction-based charges. These are applied at the time of performing a transaction, such as a QR payment, fund transfer, or bill payment. Event-based charges. These are triggered by specific system events, such as wallet activation, card issuance, or failed transaction attempts. What makes this module powerful is its high configurability. Admins can define charge rules based on a wide range of parameters, including customer tier or category, for example, applying different fees for gold versus silver users, transaction type, such as charges for top-up, P2P transfers, or withdrawals, currency, to support multi-currency pricing models, channel, allowing charges to vary if the transaction is performed via app, USSD, ATM, or chatbot, and even based on KYC level or user profile. This flexibility allows banks and wallet providers to not only ensure cost recovery but also to design tiered pricing strategies that can incentivize usage, promote specific channels, or even deter risky behaviors. Once charges are configured, the Charges History dashboard offers a clear and centralized view of all charges defined in the system. This screen helps admins and product teams easily monitor and manage charge configurations. Each row in the table gives you quick visibility into the charge code and its description, the status, whether it's active or disabled, the charge type, such as tax, normal, or other business-defined categories, the scheme type, like slab-based, flat, or conditional, and the value type, which could be rate-based or a fixed amount. For example, if a charge is defined as a slab-based tax with a rate type, it means the percentage fee varies depending on the transaction amount bracket. Now let's walk through the charge creation process. This screen enables the wallet admin to configure various types of charges, whether it's flat fees, slab-based charges, or tiered pricing structures. You begin by entering the charge code, which is a unique identifier for internal tracking. Next, select the charge type, for example, tax, service fee, or convenience charge. Then define the scheme type. This determines how the charge will be calculated. A flat scheme means the same fee applies to all transactions. A slab scheme allows different rates based on transaction amount brackets. And a tiered scheme can apply rates cumulatively over different segments. You also define whether the value type will be a fixed amount or a percentage rate, depending on your pricing model. All configurations are completed by filling in the charge status, description, and linking to the default scheme or any custom schemes. This highly configurable setup gives the bank or wallet operator flexibility to define complex charging rules while maintaining compliance and business control. Users can create charges by filling in key details such as the charge code, the charge type, whether it's a commission, normal, or tax, and a brief description explaining the purpose of the charge. They also need to define the scheme type, flat, slab, or tier, and the value type, which could either be a fixed amount or a rate. Once the charge definition is set, the next step is to add a scheme. Here, users specify the applicability period by entering a start and end date. For example, if the scheme type is set as flat, the system applies a fixed rate when the transaction amount falls within the defined minimum and maximum range. The platform also allows real-time charge simulation through the Select Charge option. Based on the chosen charge code, users can input the currency, country, and transaction amount, and the system automatically calculates the applicable charge along with the final payable amount. If the scheme type is set to slab and the value type is amount, users can define multiple amount ranges, each with a different charge amount. In this case, the charge is cumulative. That means if the transaction amount crosses multiple slabs, charges from each applicable slab are combined. On the other hand, if the user selects the tier scheme, the charge is applied only to the portion of the amount that falls within the applicable tier. This method is useful when you want to charge progressively based on how much of the amount falls within specific brackets. Thank you for watching this walkthrough. We hope this session helped you understand how to configure and manage transaction limits, holding limits, and charges effectively. Stay tuned for more tutorials and product updates.